All right. Good morning, good afternoon, good evening, ladies and gentlemen, depending on the location that you are joining us today. I trust and believe that we are doing okay. We want to be grateful again this morning for the gift of life. Yes, we don't take it for granted that we are alive. It's an opportunity, it's a privilege. Okay, all right. All right, so I welcome everyone and thank you for joining us. If I'm loud and clear, kindly drop me a one in the chat if I'm audible. If I'm audible, if you can hear me, please indicate in the chat that I'm loud and clear. My voice is audible. Okay, all right. So there is feedback there. It means I'm loud and clear. If it happens that I'm breaking, please let me know in the chat as well. If I happen that I'm breaking, let me know in the chat as well in the course of our training so that we are able to hear each other. Okay, so welcome everyone and thank you for joining this morning. Today is Friday, the 17th of April 2026. We started on Monday our technical analysis class where we were looking at the beginners, which was customizing our trading view. We are still at the beginning of our syllabus where we are still trying to understand technical analysis from the beginning, especially to those that are new in the business. They have joined our amazing RoyalQ business. They are getting some signals, they are trading, but now they decided to join extra classes where we are sharing information on how to trade effectively with the RoyalQ robot. Like I've been saying, the idea is to empower you, ladies and gentlemen, so that you are able to trade on your own. You are able to create signals, you are able to generate signals and trade them using your RoyalQ robot instead of you waiting for signals in the group. Okay, so it's all about empowering you so that you are able to trade without waiting for a signal. So we have been looking at customizing your trading view, which is an application that everyone who is into trading needed to have for their technical analysis, trying to understand how the market works so that you are able to enter the market objectively. Okay, that is the main idea. You are able to make good entries in the market because I think that is the basis for trading. If your entries are poor, then it becomes a problem. Yes, sometimes we know that we do not control the market. The market will never be our friend, but at least if we understand the trend of the market, then that can be our friend. By looking at the trend, we are able to see the direction of the market, where the market is going. So if we want to enter the market, then at least we do that with a proper decision that has been made from what we have seen from our analysis. So let me share my screen here, and then we get into our training for today. Okay, is my screen visible? Are you able to see my screen? Are you able to see that I'm sharing screen? Are you able to see that I'm sharing screen? If you are able to see, please give me a feedback. If you are able to see that I'm sharing screen, give me feedback in the chat. Okay. All right. So let me go to TradingView. All right. So ladies and gentlemen, when we are talking about technical analysis, let me remove all this stuff here. I just want to use this space here. Let me do this. I needed to use this space here for my writings. So let me do this, and okay. Okay. So ladies and gentlemen, when we are doing technical analysis, the main idea is to understand how market movers are doing in the market. We are looking at buying and selling. So if we are to talk about buying and selling, it means there should be buyers in the market. All right. Not only buyers, we should also have sellers in the market. So these two groups, okay, these are the ones that controls the market. So the idea is to understand how buyers and sellers behave, so that we are able to join them if we are to become buyers, and at a later stage we are going to become sellers after we have achieved what we want to achieve, like our profit. We have profited and we want to exit the market. So the market is comprised of two forces. Okay, we normally call them forces. These are the two forces of the market, the buyers and the sellers. Okay, in economics, we normally say demand and supply. Okay, in economics, we normally say demand and supply. Okay, so we want to understand demand and supply. All right, so demand and supply, we are still looking at those that are buyers. It is the same thing as demand. And those that are sellers, they are supplying. Okay, so these terms, they are used interchangeably. When we come to the world of crypto, when we are talking about buyers or we are talking about demand, either supply or sellers, we do have some crypto terms that we normally use. When it comes to buyers, you are going to hear us saying bulls in the market. Okay, probably you have been hearing that the bull run is coming, the bull run is coming. So what is bull? So we are recalling about buyers, we are talking about demand. So bulls, it is a crypto term that we normally use it to identify or probably to mention about buyers. So it is the same like bulls. When it comes to supply or sellers, in crypto terms, we also have the word which we normally use, which we call bears. Okay, we call bears. So these are sellers in the crypto market. So you are going to hear these words being used interchangeably. If someone is not saying buyers, probably he might be saying bulls. If he's not saying bulls, probably is going to say demand. The same applies to the other power, which is supply power, or probably a selling power, or we are looking at those that brings the price to the bottom. Okay, so for us to acquaint ourselves with the market, we needed to study, or we needed to understand the behavior of these two powers. Okay, no one else controls the market apart from the buyers and the sellers. These are market movers. These are the ones that controls the market. Hence, we always say RoyalQ does not control the market. It only monitors the price in the market. So who controls the market? It is buyers and sellers. These are decision makers when it comes to the market. So the reason why we have been here trying to understand the use of TradingView, we want to understand these buyers and sellers in detail using our TradingView app. Okay, using our TradingView app, we want to see, we want to connect to the world market when it comes to crypto using the TradingView app. So we want to analyze the behavior of buyers as well as the behavior of sellers, so that we are able to make good entries in the market. Now, how do we study the behavior of buyers? How do we study the behavior of sellers in the market? That's why we are making some baby steps here, so that we are all together. When we reach a point where you are able to make good entries in the market. So for us to understand buyers, for us to understand sellers, we need to come to the market. When we come to the market, you are going to find out that the buyers and the sellers, they do have a representation. Okay, the buyers and the sellers, they do have a representation. For us to be able to understand these two powers, okay, these two powers, they are represented by a candlestick, what you are seeing on your screen right now. Okay, yes, these candles, they represent buyers and sellers. Okay, so in this case, we do have candles that are in green color. I remember I did explain to you why the color green. Okay, it is your decision, it is your choice that your candles should look green in color. Okay, and also it should look red in color. So we have selected these two colors. So now the red color represents sellers in the market. Wherever you see red, it means that is sellers that are in the market. Wherever you see green, it means you are looking at a buyer, or you are looking at buyers in the market. So we are going to go on a study to study the behavior of buyers as well as sellers by looking at a candlestick. So what is a candlestick? A candlestick, it is a visual representation. Okay, a candlestick, it is a visual representation of what is going on in the market right now. Okay, we are looking at a visual representation. When we say visual representation, we are trying to say, okay, someone is somewhere. I am in South Africa, someone is on the other part of the world, but all of us, if we can come and open this particular asset, okay, this particular coin that is on our screen, all of us, we are going to see the same information. It does not matter where you are. So we are joined together to have a look, to look at the behavior of buyers and sellers in this coin. They are buyers and sellers. So the green candle represents buyers, the red candle represents sellers. So they are buyers and sellers in this market, in this coin, right? So for us to be able to see what buyers and sellers are doing, we can see that, or we can track that by looking at a candlestick. By looking at a candlestick. So we are saying, what is a candlestick? A candlestick, it is a visual representation. Okay, you can look at it and see what is going on. For example, if I may change the time frame to a lower time frame here, probably if we may give it 5 minutes, okay? If we may give it like 5 minutes, maybe we are able to see a difference here. All right. So we are looking at a visual representation. If you look at this candle over here, this one, you are able to see that there is movement. There is up and down. Okay. So the price is moving up and down. It means buyers and sellers, they are doing their activities in the market right now when it comes to this particular coin. So for us to be able to see what buyers are doing, what sellers are doing, we can only do so by looking at a candle. So the candle is going to tell us, the candle is going to help us understand the behavior of these market participants, which are buyers and sellers. So at a certain stage, it is going to be us, because we are also trading. Okay, can you imagine the entire RoyalQ community trading together? It means something is happening in the market. If we were to trade, for example, let's say that the entire RoyalQ community, okay, all of us, we trade one coin at the same time. Can you imagine? Okay, I just want you to have that thinking and say the entire RoyalQ community, we enter a particular trade, all of us the same time. It means we can bring a difference. All right. So you are able to see that there is movement of price just by looking at this candle. So the candle gives us a visual, what? A visual representation of what is going on in the market. Okay, that's what the candle is going to give us. So when we are looking at candles, we are looking at a visual representation. Candlesticks, they help us to understand the importance when we are trading, especially when we are doing our technical analysis. Why? Candles or a candlestick is considered as a visual representation of what is going on in the market. Now, just by looking at this candle here, just by looking at that candle, you are going to see very important information. What is the important information that I'm talking about? By looking at this candle, you can see the valuable information about price. Okay, if you are to look closely here, you will see that the price is going up, the price is going down. So at a certain time, when this candle closes, you are able to see where price opened and probably where the price did what? Close. So by looking at a candle, you can see information like the opening of the price. Remember, this is a 5-minute session. Can you see here? It is a 5-minute session. Just seconds are left here for this candle to complete. So in this 5-minute session, okay, can you see? There is a new candle that has just started. So you can see there was opening here. The price opened here. The next 5 minutes that has just started now, the price has opened here. So you are able to see through a candle, you are able to see the open of the price. Okay, when this candle closes, you are going to see the close of the price. For example, in this previous candle, which is already done, you are able to see that when price opened here, because this was the opening of the price in this previous candle here, the green one. So you can see that this was the opening and this is the closing. That's where the price closed. This is where the price opened. By looking at this candle as well, you are able to see that in the 15 minutes time frame, how far the price went up. Remember, when price is moving, it goes up, it goes down. Okay, so in that particular trade session, how far did the price go? So we are looking at the high of the price. How far did it go in terms of up? And how far did it go in terms of down? So we are looking at the low of the price, and we are also looking at the high of the what? Of the price. Just by looking at a candlestick, we are able to get all that information. I don't know if we are together here. I'm trying to build a foundation of what is a candle, so that when we go into details, trying to understand and finding names, because these candles, we are going to find out that they do have names according to how they are structured and how do they represent. As a result, we are going to look at these to be market reversal signals. Okay, the candles are going to become the market reversal signals. They are going to signal, okay, which direction of the market is it. Okay, so I'm looking at a candlestick as such. What does the candlestick help us with? Okay, now I was talking about getting valuable information about how the market move, whether it went up, whether it went down, as well as how high did it go. We are looking at the high, we are looking at the low. Okay, not only that, we are looking at the open of the price in that particular trade session. We are also looking at where the price closed when that trade session was ending. So these are some of the things that you are going to find when you look at a candlestick. Right? Now, let's go a little bit further. That is about valuable. Yes, the value of a candlestick. What information does the candle brings? Okay, now let us look at flexibility. We want to look at flexibility. Are candles flexible? Yes, they are flexible. How? You see, someone can just look at a candle like this, okay, without maybe combining other technical analysis tools. They can just look at a candle like this. They are able to see, okay, they are able to see the direction of the market. For example, if I may just bring my screen like this, okay, if I may bring my screen like this, you are able to see that there was a trend. We are going to learn about trends in the market. Okay, we're going to learn about trends in the market. So you are going to see here that the market was going up. When I say the market, I'm referring to price. Whenever I'm using the word market, I'm referring to price, because here we are doing price action. Okay, so you can see that by looking at the way these candles are growing, you can see that this market was coming from the bottom. It has been going up that way. So this is the high, as you can see. Can you see it is indicating the high? In this time frame, you can see that that is how high the price went. When it reached at this level, the price started to go down, as you can see. Just by looking at the candles, you are able to see that the trend of the market is no longer an uptrend, but now it is a down trend. So we are saying that candles are flexible. You are able to look at one candle and it will tell you the direction of the market, or which trend the market has taken so far. So that is the flexibility of the what? Of the market. Let me give you an example, maybe a good one. All right. You see, we are using candles here. All right. We are using candles here. When you look at this, I want to change, because I wanna bring the difference. Why are we using candles? Okay, because there are other tools here that you can change to apart from candles. if you do not want to use candles, right? You don't want to use candles. You want to use probably bars. I want you to see the difference. Why are we deciding, or why do we choose to use candles to analyze the market? All right. So I'm talking about flexibility here. You are able just to look at a candle and you are able to get valuable information. So let me change these candles. Instead of candles, I'm going to put bars here. I'm going to put in bars. So I want you to see the difference. If you are able to get the right information using bars, I'm going to change to this. I want you to see how my chart is going to look like. So I'm going to put bars here. Okay, there you go. All right, there you go. Okay, so tell me, between the candles and the bars, which ones are easy for one to interpret? Between the candles, the bars, or probably let me change also. Let me change it. These are bars. Let me change it to line. Let me put a line here. Let me put a line so you can see that there is a line, there are bars, and there are candles. But we decided to use candles. Why candles? Okay, so I'm asking you a question. Between this line, okay, that represent buyers and sellers in the market, how buyers and sellers are performing in the market, they are represented by this line. Remember, I also put some bars there. So I want you to tell me, between the bars, between the line, and as well as the candles, which one of the three it is easier to use to interpret the market? Between the three, the bars, the line, and the candles, which one is easy for you to use to interpret what is going on in the market? Which one is easy for you to understand what is going on in the market? I need some answers in the chat. I'm trying to interact with you. Okay. So it seems like candlesticks, they are easy. They are easy to use to analyze the market instead of a line or instead of a bar. Okay. Hence, I'm saying candlesticks, they are flexible. Okay. Candlesticks, they are flexible. You are able to look, just by looking at candles, you are able to see, okay, you are able to see price action. You are able to have the right interpretation of price. Okay. Now, I was saying that the candles, they are flexible. So what are we trying to find out here? We want to find out the behavior. Okay? The behavior of buyers and sellers. That's what we are trying to find out here. How buyers and sellers behave in the market. This includes us, me and you. Okay? We are inside here. So we want to measure your behavior, your temperature. When it comes to behavior, how do you behave when you are trading? When you see a coin pumping, how do you behave? When you see a coin falling, dumping, how do you behave? So for us to measure that behavior, we are going to look at you inside a candlestick. Have you ever seen when a particular coin is pumping and the community is happy, they are excited, they are making money? Have you ever seen how we react? Yes. So we want to measure that behavior in the market so that we are able to find opportunities to trade. So always when it comes to human behavior, especially in relation to money, please understand me very well. When it comes to human behavior in relation to money, it is always dominated. The behavior of a human being in relation to money, it is always dominated by fear. I want you to understand this thing. When it comes to a human being, that's why I was giving an example, that when you see people making money, or people, they are having successful trades, okay? They are having successful trades, or probably they are being liquidated, they are losing money in the market, okay? They are going to portray a certain behavior as human beings, okay? So when it comes to human beings, okay, human beings' behavior in relation to money, what mostly contributes to that behavior, it is because of fear, okay? It is not only fear, there is also what we call greed. When someone is losing, probably it is because of greed. You know, there are people, when they are trading, they are making profit, they don't know when to stop. They want to continue trading the entire day simply because they are winning. But at the end, when they start losing, you discover that their loss has been contributed by greed. They did not know when to stop to trade. So I'm talking about a human behavior related to money. So there is a contribution of fear, there is a contribution of greed. Not only that, we also hope. Do you know that we normally hope that this price is going to rise? This price is going to go down. When the price has gone down, we always hope that it is going to go up. Okay? In our situation of hoping, we are anticipating that the price is going to rise, only to find out the price is still continuing to go down. So I'm talking about what contribute, okay, what contribute to human behavior in relation to money. Okay, so we are saying mostly the human behavior in relation to money, always it is dominated by fear. Okay, yes, fear of missing out, fear of losing out. People have been entering a trade, okay, just because someone has sent a message in the group and say Pepe is busy pepping. Have you ever seen people? Someone has just sent a message, with a screenshot of their income, of their profit. Then they are saying Pepe is busy pepping. Someone has just seen that message, then they go and enter a trade on Pepe. Okay? What has driven them that? It is because of fear. They are fearing to miss out because someone is busy making money from Pepe, and now they just go and enter Pepe, fearing to miss out. Are we together, ladies and gentlemen? I don't want to be talking to myself here. Are we together? Are we together? Have you ever entered a trade simply because somebody says the coin is pumping? Have you ever entered a trade simply because someone says the coin is pumping and you went and entered it? Have you ever done that? Not necessarily someone telling you, but you have just seen the coin pumping. So you feel like you're missing out. The price is already high. Because it is pumping, you are saying, I don't want to miss out. You enter immediately. Then you see the price is going down on you. Has it ever happened to you? When you see a coin pumping, you see it as an opportunity, then you just dive into it. Immediately after you enter, boom, the price goes down on you. Has it ever happened to you? Has it ever happened to you? It is because of fear. Okay? It is because of fear. You are fearing to miss out on the profit, right? So we end up losing because we are fearing. We end up losing because we are having greed. We end up losing because we are in the state of hope. We are hoping. Okay? So these are the contributing factors that dominate as human beings, okay, in relation to money. It is not only in trading, even in other businesses. Eh? In other businesses, whether it is in the business of selling things, okay, someone is buying some stuff and they are selling. Have you ever seen that you will see a season where everybody is doing the same business? If they see you selling chips on the street, you open a place where you are able to sell chips, okay, and they see that indeed you are having customers, you are making some money, okay, in your business. You will see that after some time someone is going also to open their place and start selling chips. Have you ever seen that? Have you ever seen that? If you are selling clothes, okay, you are selling a certain brand of clothes, okay, yes, and somebody sees that you are making money, people, they are fighting for that, then they end up also joining you. They start buying and selling the same clothes that you are selling, okay. So it is all because of fear. It is all because of greed. Sometimes we are hoping. Yes. So candlesticks, they are going to help us identify that. Okay? Candlesticks, they will help us identify that. Before I conclude, what's the time? Okay, we still got time. Let me proceed. Now, okay, I was checking the feedback here. Let me come back to TradingView. Okay, let me push this to the top. All right. Now, we are still on candlesticks. So I want us to have a little bit of history about candles. How did the candles come into the world? Okay, for curiosity's sake. How did the candles came into the world? Okay, so when it comes to the history of candles, we are looking at candles being around a little bit longer than anything else, especially when it comes to the Western world. Okay, I'm giving now a history of candlestick. Okay, candlesticks, they have been around a lot longer than anything else when it comes to the Western world. The Japanese, they were looking at candles, or they were looking at charts as far as the 17th century. Okay, the Japanese, they started looking at candles. They started using candles as far as 17th century. After that, it's when we saw the US coming and also start using the candlesticks. That is around the 19th century. So the Japanese came early when it comes to using candlesticks than the US. We are looking at the Western world. Now, in Japan, rice trading was introduced. During this particular time, rice trading was introduced. I don't know in your country, when did you start trading rice? Okay, yes, that commodity, the agricultural commodity. So in Japan, they started trading rice, or the market of rice was established as early as 1654 in Japan. The rice market was established around 1654. So it was not only rice that was introduced, but they were also looking at other commodities like gold. Okay, they also had other commodities like silver. Not only that, they also had other markets, just like seed oil. Okay, yes, they were also having these commodities apart from rice. But out of all these commodities, it seems like rice became the currency of the world or of the country. Apart from the seed oil, apart from the gold, apart from the silver, rice dominated the Japanese market. Okay, it became like a currency. So someone was curious, trying to find out about the buyers and sellers of rice. How do they behave? Somebody wanted to establish why the rice market is dominating the Japanese market. Instead of gold, instead of silver, instead of seed oil, why rice is dominating the market? So somebody wanted to establish that. So ladies and gentlemen, when it comes to the history of candles, we are looking at a certain gentleman by the name Munehisa Homa. Okay, Munehisa Homa happened to be a Japanese guy, okay, who was having curiosity to understand the behavior of buyers and sellers, especially rice traders. So he wanted to measure the behavior of these traders when it comes to price. So Munehisa Homa happened to have curiosity, trying to find out how buyers and sellers of rice are doing in the market. As a result, he is the guy who invented candlesticks. Okay? Munehisa Homa happened to be the guy who invented candlesticks. The idea was to measure the temperature of buyers and sellers of rice, because rice was dominating by then, around 1654, when Japan was having its markets opened. So Munehisa Homa wanted to understand the supply and demand dynamics when it comes to rice. So he identified that the fact that emotions played a part in setting of a price. Do you know that when price settings comes into picture, it is normally dependent on emotions? Eh? When it comes to price, eh? When it comes to price, normally you are going to find out that it is played out very well through emotions. Eh? Have you ever gone to an auction? Have you ever gone to an auction? How the auction is run? They will start selling, for example, a car at a certain price. Okay? They will start selling a car at $30,000, for example. Okay? They will start selling a car at $30,000. But now people are competing for price. Someone want to show off that, no, I can buy this car at a certain price apart from 30,000. Someone will bait, okay, will say, no, I am ready to give 50,000. Okay, I'm ready to offer 50,000. And somebody comes and say, no, I am ready to give 70K. by the end of that action, okay, or by the end of that event, you will discover that a car that started at 30,000 has been sold at 100,000. Okay, the car started at 30K, but it has been sold at what? At 100K. Why? It is simply because when it comes to supply and demand dynamics, the fact is emotions are at play. Emotions, they are at play. Okay? So this tells us what kind of traders are we? What kind of traders are we gonna become if we have not yet started trading? So emotions plays a very important role when it comes to trading. I want you to understand that when you are losing a trade, okay, when you are losing a trade, someone is winning the trade. That is the thing. When you are losing a trade, someone is winning the trade. When you are winning the trade, someone is losing the trade. Why? Emotions. 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 Have you ever sold a coin in loss? I want you to be honest with me. Let me come back to Zoom. Have you ever sold a coin in loss? Immediately after you have sold, or some hours after you have sold, the coin started to pump. You entered a trade and you saw that it's going against you. It's going against you. It's going now. You are under emotions now. You are like, I'm going to lose my money. I'm going to lose my money. Then you end up closing the trade. Immediately after you have closed the trade, there comes the price coming back to your price. Have you ever experienced that? Have you ever experienced that? Give me an answer. Have you ever experienced that? In most cases, you enter a trade, it goes against you, you close. Immediately after you close there, the price comes back to you. Then you'll be like, damn it. Has it ever happened to you? Yes. So what normally makes you to do that? What normally makes you to do that? Emotions, they are at play. That's why we always try to say, do not involve emotions when you are trading. But is it easy since we are human beings? Is it easy since we are human beings? No, it's not easy. Emotions will always dominate us. How you feel about something. Yes. So sometimes we end up losing just because of we are involving emotions. That's why when we are trading, we are saying, please take emotions out of trading because you're not going to be successful if you allow your emotions to get involved. So I was saying the Japanese, they started looking at the use of candlesticks as early as the 17th century, okay? Because at the time, there was a price, there was a market that was dominating their market, which was rice trading. Rice trading dominated the Japanese market. As a result, a gentleman by Munehisa Homa decided to find out the behavior of buyers and sellers when it comes to rice. How are they behaving? He wanted to understand when it comes to supply and demand dynamics relating to price. So he discovered that buyers and sellers of rice, they are dominated by emotions in their activity of buying and selling. So the same applies to us today who are into crypto trading. Yes, our decisions mostly they are dominated by our emotions. As a result, we will find out that there is fear, there is greed, and also there is hope. that makes us to decide on a particular decision. Are we still friends? Are we still friends? Because I want us to, the idea is to introduce about a candlestick. We want to look at a candlestick as a tool that we are going to use to measure the temperature of traders. Okay, our temperature when we are trading, we are going to use a candlestick to be a tool to measure that temperature. So whether you are a buyer, whether you are a seller, how can we measure your temperature? We are going to use a candlestick. That is the reason why we are making these baby steps. If you understand a candlestick, it's gonna help you to know, okay, or it's gonna guide you to make entries in the market, not just entries, but you're going to make good entries in the market as long as you do not allow emotions to control you. Yes, you enter a coin at a long, then it goes against you. You were longing the coin, it goes against you, then you'll be like, let me just sell so that I can short it, right? Yes, so you exit the long, you sell it in a loss. Immediately after selling it, you enter the same coin, now you are shorting it. Okay, because you have seen that now the price is going down, let me enter. Okay, so you exited the long and then you try to short. Immediately when you enter the short, there comes the price start to go up. Yeah, do we do that? Do we do that? Let's confess. There is nothing wrong in confessing what we do. Do we chase the market? Do we chase the market? We do revenge trading. Do we chase the market? We are not going to win if we are to trade that way. Okay, we should be calm. Okay, we should have confidence. All right, when price goes against us, normally it comes back because you end up selling a trade, exiting a trade before time because you are having fear of missing out. Yes, so this is what we are trying to do. We want to establish how to make good entries in the market because that will help us to win a trade. When we have done our part, we are talking about predicting price action, that the price is going to go up or the price is going to go down. Once we have predicted, yes, we do not control it, but at least we have tried to say this price, it seems like it is going to go down. Okay, this price, it seems like it's going to go up. Are we together? Is anyone having a question? I think I can take some questions now. I want us to open a candlestick on Monday. Yes, we wanna get into parts of a candlestick. We're gonna get into different types of candlesticks. Okay, what do they represent? What do they signal? When you come here to your trading view, okay, when you come here to your trading view, and then you see what is happening in the market like this. Okay, yeah, so we want to understand these candles. When we see other candles with a very long tail, have you ever seen that there is a candle with a big body, there is a candle with a small body, there is a candle with a long tail on the upper side, there is another candle with a longer tail, on the downside. Okay, there is a candle that looks like a plus sign. Okay, yes, we wanna go into details about these type of candles. That's where we want to go, so that we are able to have right interpretation of the market. Anyone with a question? Are you learning anything? Are you learning something, especially to those that are new in the business? Anyone with a question? Anybody with a question? If you wanna ask, you can raise your hand. I'm gonna allow you to unmute, or you can just type your question in the chat, and then I'll be able to address it. Did I leave anyone behind? Did I leave anyone behind? Be at free. Be at free. Yes. Anyone with a question before we close? So we are okay. The silence meaning we are okay. Am I correct? The silence mean we are okay. Yes. George, you can go to RoyalQ Revolution. That is the YouTube channel. You can just search RoyalQ Revolution. That's the YouTube channel where our lessons are uploaded. All right, so you can access these lessons on RoyalQ Revolution. All right, are we okay, George? That's where you can find these teachings there. They are recorded and they are uploaded there. So on Monday, we are going now to get deeper into a candlestick. We're gonna go into charts, okay? Before you learn how to draw your support and resistance, you should learn what is a candlestick. What is a candlestick? Parts of a candlestick, different parts of candles. When you see them appearing, what do they signify? Do they signify market going down? Do they signify market going up? Yes. I said that when I'm talking about market going up, I'm simply talking about price. Okay? So the candles are going to help us identify if the price is going down, if the price is going down. I mean, it's going up, so that we are able to have good entries in the market. All right. So if there is no question, then I wish you a happy Friday, Juma Mubarak, to our Muslim brothers and sisters. Yes, I wish you Juma Mubarak. We are going to meet in the upcoming Zoom. If there will be any Zoom, you are going to see the sharing of a link, meaning to say there is a Zoom session. But for today, this morning, allow me to leave it here. Thank you, everyone, for attending this lesson. We'll meet again on Monday. That is by God's grace. We do not have the power. We are not mighty at all. But by His grace, we are anticipating to meet again on Monday and then continue learning while we are trading. May the good Lord keep you safe. Yes. May He see you through in what you are doing each and every day. Yeah. Have a lovely, lovely morning. Let me sign out for now. Bye-bye.